Markets are leading into resilience today, buoyed by fresh signs that global trade isn't retreating just yet. A major corporate buyout in food, strong earnings from the airline sector, and a big-ticket infrastructure loan out of Africa are reshaping investor attention across sectors. My name is Eniola Lunge, and here's today's Zoom Out for July 10, 2025, where I help you see the bigger picture. According to a new UN report, global trade surged by $300 billion in the first half of 2025. This growth is largely thanks to strong U.S. imports demand and increased exports from the EU, even as protectionism, tariffs, and supply chain risks persist. But here's the kicker. The second half of the year looks more fragile, with divergent regional trends and geopolitical uncertainty clouding forecasts. The trade uptick is supporting global shipping rates and lifting demand for industrial commodities, especially out of Europe and Southeast Asia. So what's your Zoom Out takeaway? Trade isn't dead, it's just adapted. In a fractured world, economic corridors are shifting, with regional integration playing a growing role. But the global appetite overall for goods remains surprisingly strong. Delta Airlines reported strong second quarter earnings that surpassed analyst forecasts and reinstated its full-year guidance after facing uncertainties earlier in the year. This positive news resulted in a significant boost to Delta's stock, which jumped approximately 12%, according to the Wall Street Journal, and led to a ripple effect positively impacting shares of other major U.S. airlines, according to NASDAQ. Now, this development signals a return to stability in both leisure and business travel, coupled with effective cost management by airlines. So what's your Zoom Out takeaway? The strong performance by Delta lifted the entire U.S. airline sector, with shares in companies like United Airlines and American Airlines also seeing gains of 16.4% and 13.9% respectively. Even aviation suppliers experienced renewed buying interest, suggesting increased confidence in the industry's recovery. The normalization of travel demand is leading investors to believe that the worst of the turbulence is behind the sector for now, according to Bloomberg. Ferrero, the Italian maker of Nutella and Ferrero Rocher, announced its acquisition of WK Kellogg Co. in a deal valued at $3.1 billion. Kellogg shares surged over 30% following the announcement. This move solidifies Ferrero's expansion into the U.S. breakfast and cereal market and strengthened its overall position in the branded consumer goods sector. The deal is already sparking renewed investor interest in food industry M&As, with speculation increasing about potential future buyouts of other consumer brands. In another major deal, Kellanova, Kellogg's snack division, is also in the process of being acquired by Mars, another major player in the confectionery and snack industry, for nearly $36 billion. So what's your Zoom Out takeaway? Global brands are strategically pursuing growth through acquisitions, even in challenging economic times. Ferrero's acquisition of WK Kellogg Co. exemplifies this trend, as the company isn't just buying cereal brands, but also securing crucial shelf space, expanding its operational scale, and leveraging existing consumer loyalty in the American market. Nigeria has secured a $747 million syndicated loan led by Deutsche Bank to fund the first phase of its ambitious and controversial Lagos-Calabar Coastal Highway. The project aims to supercharge trade and tourism along the southern corridor by building a massive 435-mile highway connecting key port cities. According to reporting from Reuters, the financing covers an initial 29.5-mile section, but the broader plan spans 8 years and carries an estimated $11 billion price tag. Other lenders include First Abu Dhabi Bank, Afrexim Bank, the Abu Dhabi Exports Office, ECOWAS Bank for Investment and Development, and Zenith Bank. But this will not be a smooth ride. Environmental groups have already raised alarms over potential erosion, habitat destruction, and displacement of coastal communities. There are also ongoing concerns about transparency and oversight, especially with such high-profile foreign financing involved. So what's your Zoom Out takeaway? The deal signals a growing appetite among global investors to back African infrastructure, especially when strategic trade routes are in play. Construction and logistics firms may see upsides, but the reputational risk for lenders is real. Big infrastructure plays in emerging markets can unlock trade, but only if they earn public trust. The real test for Nigeria's coastal highway project isn't just engineering. It's environmental, it's social, and it's in financial accountability. Botswana's central bank announced it will allow the pula to depreciate more rapidly, a move meant to ease pressure on its export-dependent economy amid falling diamond revenues. Currency watchers are flagging Botswana's move as a bellwether for other African economies wrestling with inflation and global rate shifts. So what's your zoom out takeaway from this? When the global tide shifts, even stable economies have to adjust their sails. Botswana's move shows how emerging markets are rebalancing in real time. So the big picture: trade is holding on, corporate deals are heating up, and emerging markets are quietly rewriting their economic playbooks. When the world zooms in on the noise, I zoom out so you can see the bigger picture. Which of these stories are you tracking? Drop your take in the comments and don't forget to subscribe.